so if you can have a good measurement rhythm, a lightweight planning rhythm, like a routine by which you pause and take stock and plan for the next period, and then an operating rhythm, if you can get that stuff in place, like the engine will work pretty well.
Welcome back to another episode of the Revenue Reimagined podcast. We have with us today a legend in his own right in the space, Kyle Norton, who is the CRO of Owner.com, where he owns sales, partnerships, onboarding, success, support, revenue operations, and enablement. You have a little small job over there. Kyle's also a limited partner at GTM Fund and Stage 2 Capital, advisor, angel investor, spent a ton of time at Shopify. And he does a lot of work with SaaS-focused funds and startups where he shares insights and expertise on scaling, selling, and just as importantly, servicing SaaS products. Kyle, thanks for joining, man.
Yeah, thanks for the invite. Looking forward to it. I'll try to live up to
You have a small little job at Owner.com. You run a department or two.
Yeah, exactly.
How do you go from like a Shopify that you probably own a little bit of it to like Owner where you own like a lot of it? And I think this will go into some of the conversations on frameworks and efficiencies, but how do you make that jump?
It's funny, Adam and I were just talking about this before you jumped on, but I was historically a startup guy. I had never worked for a public company. My first company was maybe 250 people. Then I went into a true startup that I was employee 26 for my first VP sales gig. I did late stage private and didn't think I could do a big public company. I was like, that's not for me. I don't want to work for a big company. And then was chatting with Jake Dunlap and just getting his advice. And he's like, hey, we do this all the time as startup people. We say it's like, oh no, startup's the only real thing. This is the only career that matters. And he was like, that's a silly way to think about it. And you can learn a ton from seeing how a big scaled company operates. And so I went into those conversations with a much more open mind. And it was my boss from 2 jobs before that brought me into Shop or made the introductions. And I loved it. Like I like learning new things, and you learn a very different skill set. I learned how to operate in a very product centric context. I learned how to partner better with product and speak that language, deal with like large matrix organizations. So there was a ton of really interesting takeaways from that experience. And now I'm back in a startup, but like I feel very familiar with this. Even the job at Shopify was to build a new go-to-market engine within Shopify. My team was 5 people when I started, and then we grew it to like 80 people in 18 months. And then we reorged, and I went from this point of sale group to a regional mandate. So yeah, I've bounced around.
You've seen a little bit of change. So we were talking before the show started. So fun fact for everyone: Kyle holds the only job I've ever interviewed for, haven't gotten, and actually was upset about it. Having spent time at Toast, like that, that's how much I believe in what you all are doing there. But when you started, it was, I think, VP of Sales and Partnerships, right? It certainly wasn't CRO.
SVP Sales. We didn't have partnerships yet.
Yeah. So you were just startup world, leading a sales team.
4 reps plus a manager, like a couple $1 million ARR. Yeah, we were very small.
And you are what now? I don't know if you're willing to share the ARR, but how many reps? Like how big is your team?
20 plus million. My team's about 100 now across sales and the other functions, partnerships, onboarding.
So that's a massive jump in a very short amount of time, right? What is different specifically about the growth that you have contributed to at Owner versus a similar growth at Shopify, but in startup land versus like big companies? So 5 to 80 versus 2 to, where you are now.
Yeah. Shopify was interesting because they were one of the really interesting philosophies that they have is to operate as a 100-year company. We're here to build a 100-year company. So they don't get caught up, even for a public company, they don't get caught up in the quarter. You're indoctrinated in the onboarding. We don't pay attention to the stock price. We're here to drive value for the customer. And ultimately the market is
Interesting.
a weighing machine versus the market is voting machine versus weighing machine. And in the long term, it's a weighing machine because the real value you're creating is what will be represented in the market cap. And so the mandate I was given is like, hey, you've got like in my first year, like 80 head count. That's earmarked for you. Do what you want with it. I was like, oh, okay. Just like I get that carte blanche. There's no gates. There's no this. It's like, yeah. Like we know that the point of sale product is good. We are confident that a sales motion is going to accelerate our growth based on some like early learning. So go for it. And so I could scale as fast as I thought we could go without things falling apart. And I could make upfront investments without needing to worry about the burn impact or overbuilding. And so I brought in enablement really early, RevOps really early. We grew those teams. I hired leaders that were like, not really stage appropriate. So like one of my first managers was a former VP of sales, and she would have never taken the role if I hadn't said, well, hey, look, like the team is going to scale to this number in this period of time. The budget is committed. Come in and do the manager thing, and then I'll slot you into the second line role. And then she became my head of sales for that group, and in like an instant. And I could make so many forward looking decisions because the budget was pre-committed. And startup, we are still building with the future in mind, and we're making investments ahead of time. But you have to play a much finer balancing game of, you don't want to overhire, make the mistake that so many companies have made, overhire compared to your pipeline production or compared to the product maturity. And then you're doing like mini layoffs or riffs like that, or you're in a tight burn situation like that's not a fun place to be. So you're slightly more staged and gated in terms of those investments. But now, like we clearly have this extreme product market fit. We know like really closely the economics of, we add this money to marketing, these people to sales, these BDRs here, and like the output is so consistent over a 12-year time horizon. Now I can really now we're hitting the gas, and we can do that with a predictability that gives us a lot of financial confidence.
Yeah, it's interesting. It's almost like every dollar you spend, you kind of know what that ROI is. So like if I'm going to go hire a new headcount, it's going to cost me $80,000. I know that return is going to be 240, 320 in revenue coming in the door. And I think that's where a lot of people, I've always had this thought, like everyone that you hire should have an ROI number attached to them. But how do you get to that place is always a tricky place. It's just like going through the process.
Systems and structure.
Yeah.
Like you need the systems and structure and infrastructure built so that you can build up a track record of, hey, I've got a 12-month history of when we hire 10 BDRs, 9 of them do really well. We promote a ton of them, and they produce a pretty consistent pipeline number.
Yeah.
And where many businesses find themselves, where many startups find themselves, is you hire a handful of people. One person is ripping it.
Right.
2 people are doing nothing. 3 people,
Yep.
and then it's hard to pile a bunch of extra headcount into that system with a ton of confidence, because you don't have repeatable playbooks and infrastructure. And I think that's like a thing that we've tried to do well here.
What's been the hardest thing you've had to overcome in that scale? Like that scale is super quick. Like the amount that you've scaled in that time frame is a bit probably unnatural to many people that would be listening to this. So what was the most difficult thing that you overcame in that scale?
So one of the most important things to fix early on was onboarding. So I inherited onboarding at some point, and it didn't have a lot of infrastructure. And yeah, it's great to be ripping in sales, but if if a material portion of these people don't activate, because we do month-to-month contracts, so they either don't activate or activate late, or they're not set up properly, then this has like a pretty significant impact on the business. And I think what I try to do as a revenue leader is think really holistically about the business, and try to not get trapped into the sales number.
Mm.
I think this is a trap that many people fall into, is, they feel like they're successful because the sales number is great, but the business isn't growing because churn is bad. Well, like half or more of churn is probably customer quality. It certainly was for us, or how they were set up for success with the expectations that were set, or the features that were demoed, and where did we emphasize. And so I think the biggest thing for me is to make sure that, like, from top of funnel all the way through to customer value, we were running those parts of the business with the same intentional approach and proficiency. That was probably the biggest thing that I've spent the most time on the last little while.
So it's funny because I think we see this everywhere, and what you just, excuse me, described is perfect. It's what we see all the time. The sales leader or the CRO, who only focuses on sales, has no idea about marketing, has no idea about customer success, and it's like, oh, we signed 100 deals, in the past quarter, and that's great. Well, yeah, but 41 of them are still here. Like, that's
Yeah.
not necessarily a good thing that you want to be proud of. When you're scaling, Kyle, and when you're looking at, stepping into that true CRO role and owning the entire revenue number, like, how do you determine where you're going to spend your time? And I want to piggyback that also with, how do you direct your CEO's time? Because a lot of sales leaders that we speak with have no idea, how do you get the CEO to focus where they need to focus instead of with what they think is important.
So there's two questions there. So one is sort of the
Yes.
difference between an executive and a senior leader.
Yep.
And so I think a sales leader thinks about their team first. They think about their team, the sales number, their compensation plan. It's relatively short-term oriented, and they are additive to the company. They're adding a lot, but you are additive. An executive is a multiplier. And so as opposed to thinking about their sales team, they think about the company first. Instead of thinking about their compensation plan, you're thinking about enterprise value. Instead of being short-term, focused on the quarter, the pipeline you need, you're focused on long-term revenue quality. You have an understanding of the P&L. And that's what makes you a multiplier. That's what makes you a person that is able to create like real enterprise value. And this is the feedback that I get a lot from the board and my CEO, is that they appreciate the fact that I am like not just thinking about the close one number. And I think I get that feedback because it's not super common, and they
Yeah.
maybe don't see that all the time across the portfolio. And so that's the distinction, is like, are you additive? Are you like bringing in the sales number, or are you a multiplier? You're like a productive contributor to product conversations. You're
Who
helping.
taught you to think that way? Because that's not normal, right? Like, and you just said it, like, they don't see it all the time. Where did you have this epiphany, or who taught you that, like, shit, man, it's not just about the closed one deals. Like, I'm not going to get where I want to go in my career that way. People buy from people. That's why companies who invest in meaningful connections win. The best part? Gifting doesn't have to be expensive to drive results, just thoughtful. Sendoso's intelligent gifting platform is designed to boost personalized engagement throughout the entire sales process. Trust me, I led sales for a Sendoso competitor, and I could tell you, no one does gifting better than Sendoso. If you're looking for a proven way to win and retain more customers, visit sendoso.com.
Yeah, there was two places, when I became a first-time VP sales, I really tried to learn about like building a SaaS business. What is this whole thing about? And like, not to be a total brown noser, but like SaaSter. Like I like went so crazy deep on all things SaaSter, and I learned so much from Lemkin before owner, and I was involved with him personally. But like really trying to understand the broader picture, and like Lemkin was one of the first guys that really talked about the importance of CS and how to think about that as a revenue engine, and so. I started to try to educate myself there because my first VP sales job, like I was not that well rounded. I was like focused on the sales number, and the thing I pushed product on were the things that like got me the sales number. And I didn't have like a churn oriented view there.
Okay.
So just like general reading. And then I worked with a really good executive coach, this guy, Paulo da Silva, here in Toronto. And he pushed me to like see the bigger picture, and just, like executive coaches do. It's like, how do you think, like, what do you think that person thought about that? And how do you think they interpreted this? And through this executive coaching work, I really came to understand. I'm like, oh yeah, that probably isn't the right approach. As a salesperson, you're a competitor. Like I'm a competitive psychopath. And like, that's why I was good at the job. That's why I was good at the job, because I want to win. But at the same time, you got to be able to turn that off when it comes to your teammates. And I had to learn how to create like win-win conversations as opposed to like debate.
Yeah.
Like when I had a thing, like when there was a strategic disagreement, I went into, as Adam Grant would talk about, like prosecutor and preacher mode. And I would just like hammer people with the data and the customer feedback, and like try to beat them into submission. But like, you can't convince anybody of something in that scenario, because now getting to the right answer, or what I perceive to be the right answer, means they have to lose the debate.
Yeah.
And especially if this is a, multi-time CEO, or there's an age difference, or, there's just a power difference between VP sales and CEO. Like, you're very unlikely to win that battle, because you've created a win-lose argument.
Yep.
And so I had to learn to get better at like building a more constructive way to like get to the right answer.
It's okay, Adam. We can get you to multiplier. We know you're at additive right now. We can get you over to multiplier. It's all good. We'll train you up. We'll train you. We'll show you the way.
Yeah, listen, I'm good with it.
Kyle, as the CRO, and your evolution from being the VP of sales into the CRO, and now you see across the go-to-market motion from marketing through CS and see how product's running. What would you say are the top three things that new CROs should be looking at from a metrics perspective that would help drive their business?
So outside of the sales stuff, you mean?
It could be anything, like anything through the go-to-market. Like, is it lead conversion? Is it deal velocity? Like, what are the metrics that you're really keen on right now?
There's not three. There's more like 30.
Sure.
So let me just highlight.
I know that, but maybe the top 10.
Yeah, let me just highlight some of the things that I think people miss.
Yep.
Because I think we're all looking at our funnel and breaking it down by AQL to book to show to demo held, close rates. Like that, I think we do a pretty good job of. But I think where people could spend more time, if you want to position yourself to be like an executive, like I'm a part of, even if you only own sales, but you want to be a C-suite contributor and seen in that light, I think if there was three things, like go deep on churn and understand what part of churn is driven by sales, either expectation setting, handoff quality, customer quality. Like, are these the right people that have the right problem for us to solve? Because if you close a deal and it churns in 12 months,
not good.
It's better to like not have had that revenue at all.
Yeah, it actually costs you money. Like the net gain is negative. Like, what's the return? It's at least 18 months, right?
If you're good, 18-month payback period, lots of companies would love.
Yeah.
But it could be 24, 36 months. And so, let alone talking about like,
well, if
33 at Toast, Kyle, when I was there, but who's counting?
If they really calculate CAC properly. I mean, who's calculating CAC properly?
Yeah. And like it works for Toast because you've got this other suite of products and you're expanding and all this stuff. But So I think like revenue leaders, if you want to be taken super seriously by your CEO and have your opinion valued, you have to be able to speak about the business broader than just sales. So a super deep understanding of churn, and especially understanding what role sales plays in that churn, and then own it. Just be like, hey, I looked at a bunch of this stuff. This is on me. My team is closing some like questionable deals,
Yep.
or we need to do better, and like go spend the time shoring that stuff up.
Yep.
So a really deep understanding of churn would be number one. Efficiency. I think like this was again a big difference between first time VP of sales me versus now is I'm like, yeah, more reps. Let's hire more reps. Let's like get more bodies in here. We like all collectively built a model that was way too optimistic, and we ended up having to lay off like 25% of the sales team at some point because we just like didn't have the pipeline
Yeah.
to feed that team. And so being more efficiency focused, understanding your unit economics, payback period, CAC LTV, how do all these things play together, and can you understand it by channel? So is your inbound channel really efficient, but your outbound channel is a mess? Okay, then how do you go improve efficiency there? And the final thing would just be like holistic P&L, like holistic understanding of the P&L.
Or just
Beyond,
forecasting in general, right? Like not from the top down, but maybe more bottoms up, like forecasting.
yeah, yeah, yeah. And when I say P&L, I mean like the profit and loss statement, the income statement, to really understand, all right, like how does this whole machine work, and what are the levers that drive growth? Because what oftentimes as revenue leaders we don't understand is like the changing churn has such an exponential impact on the business, and maybe that is where you should spend an entire quarter versus something else. Or maybe, by understanding the P&L and really looking at like the cost of the events that you've been running. And, oh, we only generated this much revenue, and this much revenue churned in this period, and so like the return on those things, like just I think just general financial and P&L fluency is like another place that if you want to like make that true C-suite jump
Yep.
is important.
Yep.
I was typing notes. I don't do that a lot during our shows, but I'm literally typing notes.
This is
This is good
recorded. You
stuff.
can go back and listen to it. It won't hurt you.
I understand, but it's easier for me to remember if I take the notes at the same time.
Yeah.
Kyle, what's your real quick, what's your opinion on, and I totally agree with you. I don't think enough people understand churn as it relates to sales, or even one more step up, marketing. Like, is it really the right ICP that we're selling into? Because that drip down from marketing into sales, like you get into like a domino effect. If it's wrong at the top, then it's going to be wrong in the middle, and it's going to be really wrong at the end and
Yeah.
cost you a lot of money. But what's your opinion on looking at NRR or NDR versus churn from like a metric to like pin your hat on?
It's all important. Like you got to look at gross and net. If you only look at one, you're going to miss some of the picture, because your NRR could look good because you've got 2 or 3 customers that have like expanded like crazy.
Yeah.
But then from a logo count perspective, you've bled 20% of your customers, and that will give you different signal. It's all about triangulation. Like it's hard because you don't want to look at every single metric and get lost in it, but at the same time you want to figure out like what are your absolute like must move metrics. My VP of sales, Brett, he talks about with his team like biggest needle movers this week, this month. What is your number one biggest needle mover? And so we're combing through in our monthly business review process everything. We look at like every piece of data across the team, and then go find the thing that we want to spend the most time on, and then we go really deep on it. And so by going through net versus gross churn, NRR versus NDR versus GRR, you can start to pick up these patterns, and then you just pick that one thing and then tackle it over some period of time.
Yep.
So you don't have to constantly juggle 100 metrics,
Yep.
but it's in some cadence. For us, it's monthly because we're S&P high velocity, but for many businesses, it's like once a quarter. You really go through everything, and then let that direct you to the can't miss metrics.
Yep.
So like in my SLT meeting agenda, there's a section of it in Notion that stays there every week, which is like the can't miss metrics. These are the things that we care about right now. So I don't care about close rate right now. We feel great. We feel good about close rate. We've moved close rate significantly, a couple quarters ago. But like the one thing is whatever, and like we look at that thing every single week to track against that. To track against it. That's a good way to like take this pretty like overwhelming cloud of data and try to like thin it down to something that drives more action.
Love that.
And I think, if memory serves me right, you actually shared your business review template on LinkedIn like a week ago or two. I think you shared like a massive Notion document of like every metric that everyone looks at, and that you have your teams report on.
Yeah, I think I shared like 6 different Notion templates on my Substack. So I gave a talk at SaaStr, which should be up. The recording should be up in a week or two. And I went through what I call my revenue operating system, or revenue OS.
Yeah.
Thanks to Brandon Gailey for that name. But I shared this whole revenue OS, which is a breakdown of like how I run the team, how I communicate the metrics, and then I made template versions of everything. So you can go to the Substack's the Revenue Leadership Podcast.
I actually literally have it in a window on my screen.
Good, nice.
Like true story, and so everyone doesn't think that I'm lying.
And I'm writing a newsletter on this topic of the difference between executives and senior leaders. So
now I got to figure out how to stop. All right, there we go. So that's super cool. I love the giving back. It's something that's important to us as well, and the fact that you're willing to share that and make other people better, I think is huge. Kyle, we work with and we talk to a lot of founders, first time, maybe second time CROs.
Mm-hmm.
With the passion you have for specifically for frameworks and infrastructure, when they're trying to build out for the very first time, like a real go-to-market, motion, where would you tell them are the top things? Like, you got to start here. You can't friggin' go here unless you start here.
Yeah. So this is it on my Substack, my revenue operating system. I wrote a whole like massive page on this, and so you can get it in a lot more detail. But it starts with the measurement cadence, like your ability to understand what's actually happening in the business. If you can't understand and you don't have the right infrastructure to capture what's happening on the front lines, then you can't do anything really. So you need the right data collected in a lightweight, structured manner. You need a cadence to review that data. Then you need a planning rhythm, like a light planning rhythm. So each month, how do you synthesize what's happened and make sense of it and make decisions about what's going to happen in the next month? That's like the planning rhythm. And then the final piece would be like your team rhythms. So how do you operate day to day? So we do our weekly stand up and we cover these things, and here's the template for our meeting. And then every week I want a written summary, and I use this thing called Maple, metrics, advanced. So what did you do that week? Planned. What are you planning to do the next week? Learnings and emergencies, MAPLE. And my senior leaders all fill out a Maple update that I review on Sunday nights, and it powers what we do in our one-on-ones and what we want to talk about in team conversations. And so if you can have a good measurement rhythm, a lightweight planning rhythm, like a routine by which you pause and take stock and plan for the next period, and then an operating rhythm, so how you want to engage as a team. So a template for your one-on-ones, and there's a template linked in that page, a template for your team meetings, a template for your weekly update. If you can get that stuff in place, like the engine will work pretty well.
What was the E in Maple?
Emergencies. It's like emergencies are just stuff that's important, but stuff that's important didn't make Maple. So E might be like a little alarmist, but yeah, it's like things
Yeah, but
that I need you to do.
sometimes alarmist is needed. Like, listen, everything can't be an emergency and everything can't be a fire. But there are things that, like,
Yeah,
hey, it might not be in, and I like Maple. It might not be in one of these categories, but shit, dude, I got to discuss this with you before we get off this Zoom.
yeah.
Um,
And I
cool.
like I like these mnemonics and anagrams and like silly things like Maple or like our can't miss metrics or Kyle's top 10. Like I name all of these things so that they're memorable.
Mm.
And
Yeah.
when I say, hey, like we got to do this or we got to do that, like everybody knows what it is and we can sort of
Yep.
teach people around it.
It's like common language, like total common language.
Yeah. Could be OKRs and you can call it whatever you want, but like just having a common language makes things run a little more smoothly.
Man, I wish we had 90 more minutes. There is so much. I would like to plug you in for another 90 minutes. We are definitely going to have to find a time for a V2. But in the interim, as we wrap it up, as we do with everyone, I'd love it if you're game to throw some rapid fire at you, man.
Let's do it.
All right, early bird or night owl?
I was a night owl. Now I'm an early bird.
Is that because of kids? Is that because of
yeah.
the hours of San Francisco?
Mostly because of kids.
Yeah.
Kids. Yeah.
That'll get you every time. Then you just become an early bird for the rest of your life. So just
yeah, exactly.
If you weren't in tech, what other industry or something else that you'd be in? Trade,
I have no idea.
musician, sports person.
I like what I do. Yeah, I would love to say professional athlete, but I'm not that physically gifted, so that's a poor answer. I almost went to fine art school. I was like
Nice.
I went to business school, but I was a hair away from going into fine art school. So maybe I'd be a sculptor. Sculpture was like my thing.
Okay.
Nice. Kyle, what's your favorite guilty pleasure snack, man?
Oh, wings or salt and vinegar chips.
Oh, my kid would love you. Salt and vinegar chips. I can't. The wings I'm with you on, man. Can't do the salt and vinegar.
Oh, the best.
What's the most used work emoji in Slack, text, etc.?
Probably the handshake.
Okay. Makes sense.
Yeah.
Makes sense.
All right, two more. Other than your iPhone or Android, I hope you use an iPhone. But other than your phone, what's the one tech gadget you can't live without?
Oh, AirPods, for sure. I listen to, according to my Spotify Wrapped, I listened to 54,000 minutes of podcasts last year.
Wow.
Which is like 2 hours a day. Yeah. When I work out, when I wash dishes, when I'm like doing chores, I got a podcast going or an audiobook.
So you're a true lifelong learner then. Like it's all about learning constantly.
I'm addicted. Yeah.
That's awesome, man.
My wife likes to tease me. Like she's like, you love tidbits, just like tidbits about stuff, anything and everything. I like to learn about. And that's why I started my own podcast. Cause I'm like, I think I can do something here. I've listened to enough. I gotta
part of Top Line and Pavilion, right?
Mm-hmm. Part of the
shameless plug.
Network.
I love that. Last one as we wrap it up. Dream vacation destination.
I like adventure vacations. Japan was the best vacation I've ever been on, I would say. My wife and I did that right before having kids. But anything, like wilderness, adventure, far-flung places. Yeah, probably like something mountaineering in the Alps would be up there for me right now. I've never done that.
Love that. Cool.
That's awesome. We my dream is an African safari. So I'm with you with that
was our honeymoon, and it was the second best trip we've ever done. It was
so jealous.
Yeah, it felt like you were in Jurassic Park. It was a crazy experience.
Kyle, thank you so much for joining, man. Go check Kyle out on LinkedIn. If you are a small and medium restaurant owner, small medium business restaurant owner, check out owner.com, the absolute best restaurant tech you can find. Kyle, thanks for joining the show, man.
Thanks.
Appreciate it, man.